Well, a very good morning to you, ladies and gentlemen, and a warm welcome to the second day of TI Global Summit 2020. And thank you so much for joining us from across the globe. Ladies and gentlemen, like yesterday, we've been witnessing some very brilliant sessions today as well. Well, this morning, we actually learned many things. Firstly, in the first session, was how to change your old thought into a new thought and make all the difference in your business. And of course, we learned as our speaker stated how important it is to educate the underprivileged youth for strengthening the economy. And likewise, let's begin with the next session, another very interesting session. So do stick around with us. Now, let me go ahead and introduce Mr. Pranav Shah, who will be introducing the session, and of course, the speakers. Mr. Pranav Shah is a CEO of Enterprise Software Solutions, an IT consulting company building marketing solutions for the world's largest companies. Ladies and gentlemen, join me in welcoming Mr. Pranav Shah. Welcome, sir.
Thank you, Dhani, and good morning, attendees. Welcome to this panel discussion on angel investors. Today we have with us the renowned investors N. Krishna Kumar, managing partner of Mela Ventures, and Usaf Somani, partner in AngelList India, in conversation with Padmaja Ruparel, the co-founder of Indian Angel Network and founding partner of the IAN Fund. As a partner in one of the India's largest angel funds, Padmaja Ruparel is busy building a company that wants to fund at least 500 startups that can create over 30,000 jobs in the next 10 years. Padmaja co-founded IAN a little over 10 years ago, and today it has over 500 angel investors, having backed 135 startups in 17 countries. She is also the founding partner of IAN Fund, a unique differentiated rupees 450 crores fund, which along with IAN is set to create the largest horizontal platform in India for investing in seed and early stage ventures. She has been awarded as one of the top 50 most powerful women in business by Fortune India and 30 most powerful women in India by Business Today. Coming to our next panelist, Krishna Kumar Natarajan, also known as KK. He is the managing partner of Mela Ventures. He co-founded Mindtree in 1999, and he was the CEO and managing director from 2008 to 2016. Krishna Kumar was responsible for making Mindtree a global IT player. He is an active angel investor and has made over 30 investments. He also mentors actively high growth startup CEOs, helping them with approaches to the market, making the right technology choices, and organization people and fundraising. Business World and Forbes ranked him among the most valuable CEOs in India in 2016. He won the Bloomberg UTV Award as the CEO of the Year in 2010, Business Today CEO of the Year in 2014. Our next panelist Usaf Somani. He's a prolific angel investor. His portfolio includes Bharat Pay, Testbook, Jupiter, Mosaic Wellness, Sleepy All Coffee, and Sugar Cosmetics. He says one needs to have experienced the problems themselves to be able to think deeply about it and solve for it. As for his biggest strength as a relatively young member of the investor ecosystem, he says it is the ability to empathize and relate to budding entrepreneurs. So, in today's discussion, the angels are going to reveal why they do what they do. Insights that could be priceless to entrepreneurs seeking investments and wannabe investors. So, without further delay, handing over to Padmaja Ruparal, who will be moderating this panel discussion.
Thanks, Pranav. Thank you very much. First of all, welcome everybody, and I am honored to be in a panel with KK and Utsav. So, thank you for joining me. And I must congratulate TGS for an awesome event. It's really got the social media going, so this is a great event. And to the entire team of TGS and Mahavir, brilliant, just awesome. To do it in a virtual format and create this kind of buzz is a great thing because it just keeps the entrepreneur startup ecosystem buzzing and buzzing loud. So, congratulations, take a bow, everybody who's behind this. So, we've been set with a nice questions. Why do we do what we do? Why are we investing in startups which are not likely to see the light of day? Why are we investing in startups when they are not likely to be sustainable ventures? Why are we investing in startups whom nobody else invests, right? There must be something we are not doing right, or are we doing something right which others are not seeing? So it's an interesting question. It's an interesting point, and I think it allows us to really talk about why we should do what we're doing. And we seem to be continuing to do this with both of you. I think between you guys, you probably have almost 200 investee companies. We have about 170, but I think between us, we have almost 370, 400 companies. Why do we do what we do? So, right on that point, could I invite you, KK, to share your perspectives and thoughts? You've been a long time investor, but more importantly, an entrepreneur with Mindtree. So, we'll get some very interesting perspectives. And now, of course, with Mela Ventures, how do you see the move?
Thanks a lot, Padmaja. I'd like to add my compliments to the TGS team for really pulling off a phenomenal event. I think this question is so important for budding entrepreneurs, why we do what we do. A book which I read by David Brown, which says that only 1 in 50 ideas becomes a business, and only 1 in 50 of them get funded, and only 1 in 200 of them become a $1 billion company. Yeah, which means the odds of creating a $1 billion listed company is 1 in 20,000. So many times we are crazy to do what we do because we are chasing something which is exciting. Yeah. But having sort of shared the purpose that we are really chasing something which is exciting, which looks almost impossible to achieve, I think many times it's driven by simple financial parameters. If you look at public markets, over the last 15 years, the Indian equities market has generated a return of a 6.5% CAGR or somewhere in that range. And if you factor in inflation, which has been in the 4 to 5%, the real returns are just 2-3%. So first of all, as an angel investor, it is financial to say that, hey, can we beat that? But beyond the financial parameter is really, I think, a certain interest to do a bit of asset diversification now, because you really want assets which are also different. But largely, I have been driven to angel investing because I like the excitement of ideas. Because you deal with people who are thinking differently, you're driving the innovation ecosystem. And like INA has rightly pointed out, the 400 companies which have invested has created 30,000 jobs. I think it's also a key factor to create jobs. So driving innovation, creating jobs has been one of the key drivers for me to be an angel investor.
That's very interesting, what you say, KK, because that's where I started also, that it might make us money and it's very exciting and there is a brand value to it. You're putting a badge on that you're an angel investor. But I think what has really happened for me truly is a little bit more. I think, yes, all of what you said excited me, but I think angel investing has really helped me build my knowledge base, my learnings. I think the smartest guys on earth are the entrepreneurs,
Yes.
and smartest, and they're so focused. They're disruptive, and they're differentiated thinkers. So for me, I think the biggest give take back has been the learning by speaking to hundreds of entrepreneurs and thousands of them, and the experience that they share. It's like a crash course of learning, right? They're doing all the research, and we are just sort of soaking it up. I mean, who cares? You're just it's coming to you in literally pails. So I think that's, I think, a very interesting piece, and it's very humbling for sure. I think it's keeping our feet, at least my feet, on the ground and saying,
Yeah.
hey, there are much more smarter people in the world. So on that note, Utsav, you have been an angel investor. You still are, for that matter, and you have created this platform or angel list in India. You've probably interacted with hundreds of investors. It would be great to get your perspectives on this, as well as what you see on your platform.
Thanks, Padmaja, for giving me this opportunity and introducing the panel and the session so nicely. Of course, and of course to TGS as well for giving us this opportunity to interact with so many people sitting at home during these tough times for everyone. But I want to, I think, connect the dots back a little bit. I remember the first meeting at Indian Angel Network that I attended 4 or 5 years when you invited me. And the energy in that room was just mind boggling, right? Forget angel investing, forget everything else. I have never seen or experienced that level of energy and the knowledge and collective minds just come into one single room. And that was when I decided that either I want to be in this space as an entrepreneur or as an investor or something like that. So the energy was infectious. And then I think there are different kinds of angel investors that we've seen on the platform. Certain are more active people, certain are more passive people. The active ones, of course, treat this as a form of a pseudo entrepreneurship where they try to learn from the entrepreneurs and they learn about fields like, I mean, people are building like mini satellites to launch at a low cost. They're trying to build the next SpaceX from India. They're trying to build electric mobile vehicles and so many different ideas which are there and thrown at you. You're just amazed, right? And it's impossible for any angel investor to, of course, invest in everything. But the active ones do try to take sort of this as a serious form of pseudo entrepreneurship, help the founders open doors, but also get out of the way. You don't want to interfere with the founder's life too much. So we've seen both kinds on the platform. There are more passive ones who are, of course, like Krishna Kumar pointed out, looking for a financial return. I think angel investing globally, according to some reports, averages anywhere between 20 to 25% IRRs on an annualized basis. But for that, you need to be consistent. So a lot of people are just treating this as an asset class which they invest in across for a while. And I think the returns come anywhere between 5 to 10 years of your investment. So they're treating it as any other asset class. So I think for a founder, I think it's very crucial who is the mix that they pick from, like active versus passive. And certain people are building certain things where it's also a form of knowledge capital for the founder to accumulate on his cap table, just because he can get some smart minds who've built and scaled companies in their respective domains, and they can build, sort of access to sort of this knowledge pool in terms of how to scale capital. For angel investors, returns are one, but also a satisfaction in supporting the next gen, right? I think entrepreneurship will, I think Mr. Modi has pointed out Startup India and how entrepreneurship will drive and create jobs, and especially during these tricky times where I think technology startups are getting a boost, but small and medium businesses are suffering. So how do we ensure that they are technology enabled and of course come online? So it's a interesting time to support early stage companies. And I think being an angel investor gives people that satisfaction to bring the bridge between the traditional world and the new age world together.
No, absolutely. And the one thing I hope we don't get a vaccine for the infectious infection that we have as a virus for entrepreneurship and angel investing. So we don't want that vaccine for that matter. But I think you make on a more serious note, you make a very, very valid point. I think there are financial returns. In fact, I completely understand and endorse the fact that angel investing provides the kicker in HNI portfolios, ultra HNI portfolios, and with other asset classes sort of going down a little bit on reduced returns, this is surely providing the kicker. But it is also sort of telling us something more, right? This is the highest risk asset class, while it's the highest reward asset class. And therefore, there's a lot of risk mitigation strategies that need to be evolved as we go along. So that's true. But if I look at it from the entrepreneur perspective, so what you're saying is something which was knowledge capital on knowledge base on the cap table, right? And I think that's a very important point you make, because as these young entrepreneurs start to build their companies, I think there is no other money, to be honest, right? So this is very important capital coming right in. Investors were taking exactly the same risk that the entrepreneurs are taking. They're walking the same risk path, and they are putting in money, and they are trying to help, mentor, and guide. And I absolutely again agree with you, sir, that it's very important, therefore, for investors to understand when to be coach and not captain. in some ways, because we are participating in the entrepreneur's journey. We are not driving the journey in some ways. So absolutely agree with you there. It's a very powerful, I think, financial return model, but it's also a very powerful money for entrepreneurs to actually build their companies. So on that point, I think there is more to, we can go on and on forever on this, right? It's a very powerful topic in our own rights, and all of us are passionate about it. So just to take it to the next level, what the topic tells us that, VCs don't invest as an early startup, though I must say that we've started to, and bankers surely don't. So, KK, on that point, why are we doing the most stupid thing when nobody else is investing? What's the attraction? Why are bankers not investing? Why do later stage VCs don't? They want some more on the table before they start thinking about it.
No, I think that's a very interesting question, Padmaja, because I think the whole understanding in terms of how sustainable enterprises get built, I think is a new area. People are, in a way, experimenting with it and understanding it. Here, I'd probably like to bring in the thesis we have at Mela Ventures is that while we did angel investing and a lot of it was based in terms of our liking for the entrepreneur, it was more a gut feel based decision. When we looked at how many of those angel funded companies have really become a business, which means they've been able to raise institutional capital, that percentage we found was a dismal 4% in India, whereas in developed countries, it's probably double that number. And when we looked at why is it that they had failed, we realized that they were making very typical mistakes. So we then went back to the drawing board and said, if like in sports, we have seen, all of us know about IGQ, which started 10, 12 years back, and by proper coaching today, yes, India's getting medals. So we thought that such an approach can be brought to entrepreneurship, where once they've proven their initial product market fit, you really sort of coach, like you rightly said, the entrepreneurs work along with them, which means you don't work with hundreds of companies, you work with a set of few companies, and then really help them develop to become gold medal winners in the future. That's really the thesis. And in a way, I think the whole ideas of what you do in child development or what you do in sports, I think is relevant in entrepreneurship. And that is probably the reason many angel investors also, the ones which become successful tend to be very good coaches rather than being captains.
No, true, absolutely. And I think, the reason why bankers don't invest, as we come in much earlier, is very simple, right? Startup by just definition has nothing to show except the two guys standing there, right? And bankers really look at the history of the company, 3 years P&L, 3 years balance sheet, collaterals, etc. But angels or VCs just say, what's the future of the company? So we invest in the future of the company, right? And I think that's very critical for entrepreneurs out there to understand this, because you need to understand which investor to go at which stage of your company. And I think when you have nothing on the table, I think you really have to go to people who will take and walk the same risk and invest on the promise that you are showing, right? And I think for entrepreneurs, this is very important message that we'd like to get out from all three of us, that make sure that the promise that you are showcasing is something you will execute on. It's very important, right? So that is one piece I want to sort of leave on the table for entrepreneurs. And I think the other piece is really to what you're saying, KK. At IN, what you're saying is absolutely right. Our numbers are a little different, but at IN, we've seen exactly that. I think when we did a quick collation of our results, we found almost 15 to 17% of our startups failing, which is a very low percentage compared to the global average, right? And about 22% of our companies doing extremely well, raising next rounds, etc. But it was the middle that was important, because those are the companies where I think there is help required. They are the ones that can actually deliver much better. And one of the there are two resources I think that startups need. One is money and the other is talent. So we picked up on the resource base and said, let's create a fund which will invest behind the angels. And that's how the Iron Fund comes. So it really created a platform where entrepreneurs can raise from 25 lakhs to 50 crores on a single platform, moving from room to room as they keep building the company and reducing the fundraising cycle. So I agree with you what you're saying, that Mela Ventures proposition is something we saw in IN as well. And it's interesting to see that, companies, even at a portfolio range of about 170 companies, we are seeing an IRR of something like 36, 38%.
Wow.
So I think the risk mitigation, the role of the coach or the mentor is so important to help companies actually grow. So on that point, Utsav, you've been a great coach, I know. I speak to a lot of entrepreneurs you've invested in. I think you have huge networks. So how did you sort of look at it, investing in your own companies, helping them, and then you have the platform? How do you sort of work? I think that'll be interesting for us to learn as well.
Sure. So just closing in on one thread, you mentioned that bankers do not invest in startups. So there was a famous saying which comes to my mind that bankers only give you money when you prove that you don't need the money. So all the past cash flows and everything. So yeah, so it's not this thing, but early stage investing in general as a risk adjusted asset class is delivers higher returns than even institutional investing as well. So angel investing is lucrative if you do it in the right way. Of course, it can be said so many different things of how to do angel investing properly. But I typically try to help my founders in certain ways. I think the biggest value, and people should classify their angel investors in different buckets. Like some are just branded capital, like say raising from a Kunal Shah. He won't probably have the time just because he's running his own company, but his name itself is a signal to future round investors, right? So if he's vetted the investment opportunity, helped with the founders, he will still be available, but he's more of a branded capital. Then there are people who are active and vocal and available all the time on social media, and they have a large following base. So they can help you get the first set of like customers or just build up a wait list for your company. So they are super connectors. Then there are some knowledge capital folks. These are CXOs, are typically large scaled organizations like Swiggy or Flipkart and stuff, who probably don't have liquidity but can put in capital and just bring that startup experience from a later stage as well to your early stage company, help you build practices and processes internally. I typically help my companies by opening doors for future hires. I typically help them connect to upstream investors. And I, of course, bring the best practices between companies within my portfolio itself. I've done close to 70 investments now. And I think, say, a fintech investor a fintech portfolio founder who's scaled to, say, X level can now connect with the early stage founder who's starting up, or say, suppose somebody needs to connect with the Google Pay team. So they typically actively help each other out. So I treat myself as a human router of sort, where I'm just like socially connecting everyone amongst my network itself. And that effect compounds, right? More founders getting added into the AngelList India family, my portfolio, and all of this just comes together. So I try to, stay out of coaching anything. I don't think I have that relevant experience. I'm still building AngelList India and still learning the ropes of entrepreneurship and scaling an organization. So I think there are better people who I can connect them with. And that's the most joy that I get. Sometimes I love making pitch decks for founders as well, or doing financial modeling, mumbo jumbo on Excel. So different days. Every day is a fun day. You never know when the fire is coming up.
I like the way you say you're still learning. Utsav, you've been learning very, very fast. Like you've beaten us all. So,
No, no.
that's important.
It's all growing the same pie, I think. And
That's right.
in US, I think a funny statistic in US is that amount of institutional capital and angel capital is 1:1. I
Yes.
think for India to grow that entrepreneurship pie at the earliest stages, I think it still has a long way to go. And I think all of our platforms and networks are going to go sort of build that up. And very excited to be working together with everyone.
No, actually, you're right. One of the Kaufman studies about a couple of years ago, it did say that 26.8 billion was invested by angels in about 50,000 companies, right? And a little less, which was at a little over 25 billion, was invested in 5,000 companies. So it's a 1:10 ratio. and you have VCs investing a little less. So I think as VC, I also run a fund, IN fund, and as a VC, I've been put in my place in that sense to some extent. But that's the pyramid that's required, right? As you invest in seeds, and it's almost like an agriculture model, right? Like that you put in the seed, then you have shoots, and then as they grow, the next round investors come, and it's a pyramid. So yeah, I think the other piece that you're talking about is very, 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 very correct. I think angel investing is a combination of peer and promoter investing. So there are people who really put their hands together and get their shirt sleeves rolled up halfway, not full way, right? And help the companies, whereas others actually just leverage that work. But it's important because they are bringing in the money. But I think from the investor perspective, also there is a piece that I'd like to just add to your thoughts, if I may, also, is angel investing is not just writing a check. Okay, I think there is a method to the madness. There is a process and a thinking behind it, and then there is a whole monitoring piece that is required, and it's not easy because I think unlisted space, and especially in the startup ecosystem, really at the startup stage, it's extremely important that this is done well. So. I do want to also share this message that we've seen a lot of investors who've done very well in, just by putting in money without really getting into lead investor models. But there is somebody who's doing the work, and that's important to figure out who's doing that work, what is the domain expertise of the angels, and finally there is a chemistry required between in this space of investing with the entrepreneur, with the peer or lead investor. I think that's important. So I just thought I would add a little bit to what you're saying, Utsav. So we have a few minutes. I'm going to throw up a last point for us to comment on is there is this whole debate that keeps happening in the angel space that should we invest on our own individually or should we invest as groups, the pros and cons. And I think nothing in life is right or wrong. And surely there's nothing in the startup ecosystem which is a formula. It's a mix of art and science, right? So on that point, Utsav, this time I'm going to throw the question to you. So we have left a little bit of words of wisdom from the KK.
Okay, so I think different models, right? It's a full spectrum on how you typically come into the ecosystem of angel investing. I think a lot of people have come into this ecosystem just because it's been glamorized, it's been spoken about at various events and media publications. But I think it's key to understand that you need the educational hand holding to at least get started. And I think that is best done with a group, somebody who's experienced and you're following the footsteps of other people who've learned the mistakes and are willing to share them with you, just so that you don't make them at the cost of your own capital, because most angel investors are investing their own capital. So I think it's good to follow somebody who's experienced, who's done this before. So hence investing with a group like a platform or an IN network or us or anyone is, I think, a great start. And then, of course, depending on where your interest lies and how you sort of evolve in this ecosystem, and as the sort of you learn tricks of the trade, and I think then it's okay to branch out on your own. But that being said, I think groups bring more collective knowledge than any individual can, and more time, resources, and other set of resources as well. So always better in a group to start with, and then eventually you can take your own path.
So what you're saying is don't start with a spray and pray model. That's what you're saying. So
yeah.
So okay, over to you.
See, I would like to break it up into two stages, Padma. I think entrepreneurs, when they're just starting off, it's okay to go to their friends and family. I would even treat it as even a pre-seed stage, because you don't know anyone. Somebody will just give you the check without doing it. But once they've reached that stage and they've sort of ideated and got to an idea, I think it's good to go to a group. And I'd like to use the framework which Utsav nicely put it, that they need to have a diversified base of angel investors. What I tell many entrepreneurial teams is you need to be clear what are the value drivers for your organization. Once you're clear and you execute on that, valuation will come. Because unfortunately, many entrepreneurs think of valuation rather than understanding the value drivers. And this diverse group of angel investors will come much easily when you're a part of a group. Like Utsav rightly said, You might want maybe one branded guy, somebody who's influential, somebody who comes in with the knowledge capital. The best part of a group is you get all these guys in one room. So to that extent, your effort in terms of even raising the seed round is far lower, and you get a high quality investor base in that. So it's important that entrepreneurs think strategically about what sort of a mix they want and go to groups which will be able to give them this diversified user investor base.
Yeah. So it's an interesting perspective, KK. What you are honestly also saying that apart from the family fools and friends and fools money, which is the first round, and it's very critical money. I mean, all respect for it. I think I have the maximum respect for that because they're coming in when nobody else would come in, not even the angels. But what you are also saying that entrepreneurs are diluting not only for money, but for the non-financial mind space and networks and guidance that they are investing. I think this is a very important point. And let me take a different perspective to add to what both of you have said. I think investing in groups is also one more benefit. This is a very high risk investment asset class, right? There are more failures than hits, and the hits have to make up for much more for all the capital that one has invested in this class and give you better than market returns. Otherwise, it doesn't make sense. So I think there is a need as you build an angel portfolio to look at all risk mitigation possibilities. And apart from investing in different geographies, different sectors, different stages of companies, I think group investing does allow that because you are then leveraging peer investors' domain expertise and networks and leveraging the mind space and time cycles that each one would have. But there is a flip side to it also, to be fair. As I said, there's never a formula in angel investing or startup ecosystem. I think that for individuals who really want to do this and are very clear on how much time and how much mentoring and how they will invest, I think doing it individually is not a bad idea because then this is almost like a full-time occupation. I don't want to use the word job, so I'm trying to move away from that. But I think they do bring value if this is the full-time thing they want to do. And there is nothing wrong right there, but I think then they are also investing in connecting with networks outside of a group, because unless you network, you don't get the right entrepreneurs. You need to bounce off ideas with others to see whether this is a proposition that works or what's the next thing happening. Because remember, for angel investing, you're not really investing in propositions which already exist, because then you're going to be outsmarted anyway or outplayed just by the competition. So I think we are constantly looking for best of the next, which is very important. And to do that, I think there's a huge network that you need to leverage. And I think that's where for angel investing, we bring a little bit of science to the networking to say, how do we build that network, whether you invest individually or through a group. So I think there is the horses for courses, and everybody needs to sort of figure it out themselves. But clearly the message I think I would want to share is there is a method to the madness that needs to be adopted. And to Utsav's question, spray and pray is one method, no doubt, but you need to figure out, is this something that works for you? And is this something that is a risk that you're ready to take? And after you've written a check, you can sleep and not calling the entrepreneur every week and says, what happened? Why haven't you progressed, right? So I think that sort of, I hope this is sort of given some message points from both entrepreneur and investor perspective. Before I open up to questions, we do have a few. So let me just pick those up, if I may. Pranav, as an entrepreneur, when is a good time to seek out the angels, right, Pranav? You want to take on?
Yeah, that's the question.
KK?
See, many times I tell entrepreneurs, if there is a push in your current role and you want to think of entrepreneurship as an exit, then that doesn't make sense. You must be very emotionally invested in the problem which you're solving. So if you're emotionally invested and you feel very deeply about it, then that's the right time to go and approach an angel, because there is a certain passion of solving that problem which needs to be demonstrated. So I would certainly tell budding entrepreneurs not to take a push as a sign to get into entrepreneurship, but there must be a pull for it.
Sir?
No, I think burning desires, but I think it's a your mileage may vary kind of question. So people, I mean, depends on where you're at in terms of ideating. If you're already connected to angels and without even an idea, sometimes people have raised just based on the credentials or just based on their past track record, or some people actually have to build out something. So there's, I mean, some angels say too early for us, some angels say too late for us, some angels say bring us some numbers, but you can never really read into that answer as an entrepreneur, because I mean, you'll probably have to hear a lot of no's before you hear a yes. So just mentally prepare yourself. And I think just being more following a process and just going through this thing, I think you're going to experience all kinds of responses amongst angel investors. So there's no right or wrong answer in your approach here. And I think everyone's mileage may vary in this process.
So let me add, we are talking about disruption in the startup ecosystem. So let me be a little disruptive. I think before you start raising money, I think it's very important for entrepreneurs to think, is there any other way that they can build their company? Right? Because actually raising money and diluting equity is the most expensive way of raising money. Yes, I'm an angel, and yes, I'm a VC. And what I'm saying is probably against what I would like. But having said that, to be honest, if you can build a company by plowing back the revenues of your own business, if you can raise free money, which is sometimes called grants, so I must warn you, there are no free lunches, or if you can raise debt, please do that, because I think it's very important to build a company which you are able to build it as capital efficiently as you can. I think that's the first thing you should think about before even you approach any investor. That's one. The second thing, I think, even wanting to approach an investor before that, I think KK alluded to it when he was sharing it. Please focus on building a good business with a very clear vision and objective of what you want to do. If you build a business with strong foundations, with a focus on the top line and a focus on the bottom line, we all understand you will not be profitable in the first few years. But if you show a path to profitability, if you keep focusing on the execution of building the business, you will not need to go to an investor, because the investor will come knocking on your door. And I think that's the best position to be in. Then you have a situation of being a little choosy about an investor, and that's good. That's absolutely good. Yes, it's more competition for us. It's harder work for us. There's more that we need to sell to you. But ultimately, I think the business will be more valuable, and whoever is and honestly, the valuable investor will also be viewed well by an entrepreneur. So I think do keep that in mind. Focus on the business. Focus on building a strong foundation, because that is ultimately which will make value for everybody, and most for yourselves as entrepreneurs, because you're going to be holding the majority shares. So on that note, I'm afraid we've come to a close. We don't have much time. I'm sure Utsav and KK would like to obviously share more, but I'm afraid we have been called out. So from my end, thank you, KK. Sir, any last?
No.
Thank you, Padmaja. Thank you.
Okay.
You guys.
Thank you.
Bye.
Really very interesting discussion. Thank you.
Thank you, Padmaja. Thank you, Krishna Kumar. Thank you, Usaf. It was a wonderful session. I'm sure the attendees must have taken home a lot to chew about.